In this video, I'm going to be talking you through how you can invest into the US stock market, being in the UK, including the S&P 500, the NASDAQ, and the total US stock market. I'll give credit and a shout out here to @bees on Instagram who asked this question, and I get asked it a fair amount, so thought it'd be useful to make a quick video on it. Before we get into it, there's a couple of caveats. Number one, I mainly invest into global index funds, but I know a lot of people want to invest into US specific funds, so that's why I'm making this video and hopefully it's useful. And number two, I'm only going to be referring to Vanguard index funds and ETFs. That's because I only invest into Vanguard index funds and ETFs, and also use Vanguard for my stocks and shares ISA, so I know their products and their platform well. I'm sure other brokers and platforms offer similar funds that I'm going to talk about, but I'm just going to stick to Vanguard for this video. So I think it's best if we work backwards, because that'll probably be the best way to go about it. And if we start with the total US stock market, in the US there's a very popular ETF called VTSAX, which invests into large, medium and small size US companies, and it includes 3,669 stocks. So by investing into the VTSAX ETF, you're investing into the total US stock market. It's got a very low fee of 0.04%, and I see a lot of people, a lot of American Instagram content creators are big fans of this ETF. Now, in the UK, we have a similar alternative, although it is an index fund, not an ETF. We have in the UK, through Vanguard's website, the US Equity Index Fund accumulation. So all accumulation means, first of all, is that all of the dividends are reinvested, but it's called the US Equity Index Fund accumulation. Importantly, it's got 3,590 stocks, so only about 100 less stocks than the VTSAX, which is the US equivalent. It's also invests into large, medium and small size companies, just like the VTSAX, and it's got a 0.1% expense ratio. So not as cheap as the VTSAX, which is the US equivalent of 0.04, but 0.1% is still very cheap. Total US stock market exposure for 0.1%, and that is the benefit of using low cost index funds. They are very, very low cost, like the name, low cost index funds. And yeah, so I think the US Equity Index Fund accumulation, using Vanguard's platform anyway, is the best way to go about investing into the total US stock market, being in the UK. Just performing a quick comparison, look at the top 10 holdings, they're pretty much the exact same. Also looking at weighted exposure, so technology stocks in the US Equity Index Fund, which is the UK equivalent, is 26.7%. If you go back to the VTSAX, which is the US equivalent, is 26.2%. So there's a slight difference, but it's very similar. The next largest sector is healthcare, which in the US Equity Index Fund, the UK equivalent, it's 13.6. We go back to the VTSAX, it's 13.3. So as you can see, the two funds are very similar in terms of not just the number of stocks, but also how they're split across different companies and different industries, and it's very, very low fee. So the US Equity Index Fund accumulation on Vanguard's website is how you can invest and get exposure to the total US stock market through one low-cost index fund. The next one to talk about is the S&P 500. So the S&P 500 is the largest 500 stocks in the US, and it's probably the most tracked and talked about index in the world. When people benchmark their returns, it's normally to the S&P 500, and pretty much any legendary investor like Warren Buffett, Jack Bogle, Ray Dalio, they all talk about the S&P 500 and how it's pretty much one of the best index funds to invest into. On Vanguard's US platform, you have the Vanguard S&P 500 ETF, or the VOO. It's actually got 509 stocks, funnily enough, rather than 500, but it's got an expense ratio of 0.03. You're nearly paying 0% to invest in the 500 largest US companies, which is pretty mental. Going back to the UK platform, we then have the VUSA. So the VUSA is the S&P 500 ETF. This is 507 stocks. So once again, 507 versus 509. It's pretty similar. It's also got a 0.07% ongoing charge. So once again, slightly higher than the US equivalent, but it's absolute peanuts. Once again, that's very, very cheap to invest into the 500 largest US companies in the world. So one thing I will say about the VUSA is that it's an income fund. So when we looked at the total US stock market, we had an accumulation index fund. This is now an income ETF. So as I said before, I made a video on the differences between index funds and ETFs. Very similar, but there are some differences. But income versus accumulation is another separate topic. So we said accumulation index funds reinvest all of their dividends. Income funds pay out their dividends as cash. So with the VUSA, this is a income fund. So you will, whatever shares you have, I think the yield is about 2%, you will then get paid out that as cash depending on how many shares you own in the VUSA ETF. But there is a way to invest into the S&P 500 using an ETF that is accumulation being when you reinvest all of the dividends. The fund reinvests the dividends for you, and this is the VUAG. So the VUAG, or the VUAG, it isn't available on Vanguard's platform. I'm not sure why. I guess there isn't just a large enough demand for it, but it is available on Free Trade and Trading 212. So if you had accounts on them platforms and you wanted to invest into an accumulation S&P 500 ETF, then VUAG is the way to go. But VUSA is a very large ETF, S&P 500. Obviously it's not ideal that you get paid the dividends and income, but you can just simply reinvest them manually. Although personally I'm a fan of accumulation funds just because I like all my dividends being reinvested automatically, and the more that's hands off and automated, in my opinion, the better. So the third one we can look into is the NASDAQ. So the NASDAQ, similar to the S&P 500, is just another index, whereas the S&P 500 tracks the largest 500 US stocks by market cap. The NASDAQ tracks the largest 100 non-financial companies by market cap, which essentially is tech stocks. It pretty much tracks the 100 largest tech stocks, and it's just another index that we can invest into. Now I know I said at the start of this video I'm only going to be referring to Vanguard index funds and ETFs. Unfortunately, Vanguard do not offer a NASDAQ index fund or ETF, so I can't mention them on this one, but we still can invest into the NASDAQ being in the UK. So there's an ETF called QQQ. It tracks the NASDAQ 100 and it's got a 0.2 expense ratio. So slightly higher than the total US stock market, which was 0.1, and the S&P 500, which was 0.07, but still once again 0.2% to invest into the pretty much the largest 100 tech companies is pretty good going. I've got it up here on Trading 212. I think it's also available on Free Trade, but yeah, unfortunately no NASDAQ index fund or ETF on Vanguard's platform yet, but we can still invest into that index even though we're from the UK. So that wraps up this video, and hopefully now I've shown you first of all that we can invest into the US stock market, whether that's the S&P 500, the NASDAQ, or the entire US stock market being from the UK, and hopefully then reference to them specific funds has given you a bit to get started, and you do a bit of research, see which one is the best for you. As I mentioned, I mainly invest into the global stock market through global index funds. The FTSE Global All Cap is a specific one that I use, which is also on Vanguard's platform. But on some of these social trading platforms like Trading 212 and Free Trade, I do actually have some money in the S&P 500. Normally, if I'm lucky enough to get a free share, if you sign up with the link in my bio, you'll get a free share. If I get any free shares, I normally just sell them and put them into the S&P 500, and that's been my strategy. But yeah, so that is how to invest in the US stock market, being from the UK. Thank you very much for watching, and I'll catch you in the next video.